Good afternoon and welcome to today's online seminar. My name is Pierre Schlosser. I'm the scientific coordinator of the EY's Florence School of Banking and Finance, and it's a real pleasure for me to welcome you to today's online seminar and to this discussion, which will make us all reflect on valuation and resolution. I'm very glad to welcome our speakers of today, Boštjan Jazbec, member of the board and director of resolution planning and decisions at the Single Resolution Board, the SRB. José Carlos Molina, head of resolution planning at the Single Resolution Board. Anna Gardella, senior expert at the European Banking Authority. Welcome to all of you. Before entering this much awaited discussion, I'd like to inform you about our school's upcoming activities in just a few minutes, really. As you will know, our school is hosting both policy debate and training activities, meaning that our online seminars are only one of many activities that we run. Over the past years, we have trained a great deal of participants coming from central banks, supervisors, academia, and we're glad that participants came to us in Florence from around the world. Now, while our March and April activities, as you can perfectly imagine, have been quite disrupted by the coronavirus outbreak, it's a real pleasure for me to inform you of the launch of our online course on the regulation and practice of securitization. The course will be held from the 8th to the 22nd of May. The online course faculty is made up of both academics, senior industry practitioners, and senior policymakers, and will provide you with a solid overview of the regulatory and practical dimensions of securitization. It will also close up with a module on green securitization that will bring you very closely to the frontier in the field. Also, we're literally these very days working on two other activities. The first one is DebtCon 4. DebtCon 4 is a major global and interdisciplinary conference on sovereign debt with a call for papers. It will be held at the UI in Florence on 7 to 8 September and is done in partnership with Georgetown University and the Graduate Institute of Geneva. You're still on time to submit a paper, so feel free to do so. We'd be happy to have you. The second event is an online seminar on the relationship between banks and fintech actors that will be held again online on the 31st of March and will be led by Oxford professor Luca Enriquez and Hamburg University professor Georg Kringe. But let me also mention our upcoming residential activities, which we will be hosting in May and June here in Florence on network analysis, cyber resilience, macroprudential policy implementation, liquidity regulation, MiFID II, and the RTSE, so the regulatory treatment of sovereign exposures and safe assets. Moving, however, back to you now. You are around 110, you're actually 115 right now, participants connected today, following us from almost everywhere in Europe and from several other continents. We're really glad to see that 49 nationalities are represented, and we're very glad to count there on several participants from both central banks, private authorities, resolution authorities from all over the world. In terms of precise profile, well, 46% of you are women, 54% are men. You have almost 8 years of professional experience on average. This time, 50% of you are trained economists, and 22% of you have a background in business, and then we have 17% of lawyers. Lastly, 78% of you have a master's degree, 12% of you have a PhD, and 10% have a bachelor degree. Right, so that should give you a bit of background as to who is in this virtual room today. So let us now start. How do we go about this event? Well, Boštjan will get us started with an introductory intervention, following which José Carlos will then guide us through the nuts and bolts of valuation and resolution. And then we'll ask Anna to come in and comment and complement the picture. And after all that, we'll make sure that we open up the question and answer session where you participants will have a chance to write your questions, comments, clarifications, questions also in the chat box that will appear at the bottom of your screen. Now, before we start our discussion, let me also thank my colleague Jan Trevisan, who's led the preparation of the seminar and is managing our online platform as we speak now. So, let me stop here, leave the floor to Brussels and Paris. So I would just invite Boštjan and José Carlos to share your camera. I've seen that you've done it. You're there. Hi, Boštjan. It's good to see you also from distance. I believe that your mic is on, so I just hand over to you. I'll disappear and I'll come back then when you're done on the Brussels sides to hand over to Anna in Paris. So thanks a lot again for doing this with us. We're really looking forward to your thoughts.
Thank you, Pierre, for this kind introduction, and good afternoon, everyone, and thank you for attending the online seminar about the valuation resolution organized by the Florence School of Banking and Finance. It is really nice to see so many people interested in our work in valuation, which is not only ours. That is also why we have both Anna and Jose Carlos presenting today's topic. But before getting to the thrust of today's presentation, I'd just like to introduce the Single Resolution Board, which is the central resolution authority within the banking union, together with the national resolution authorities of participating member states. It forms the single resolution mechanism. And the SRB works closely with the European Commission, European Central Bank, European Banking Authority, and national competent authorities. Our mission is to ensure an orderly resolution of failing banks with minimum impact on the real economy and public finances of the participating member states and beyond. The Bank Recovery and Resolution Directive, BRD, thereafter, and the Single Resolution Mechanism Regulation, SRMR, provide the framework governing the powers of resolution authorities to intervene and resolve failing or likely to fail banks. To support and inform the decisions of the resolution authorities regarding resolution actions, the framework relies on valuations for a number of purposes. First, informing the determination of whether or not the conditions for resolution or the write-down or conversion of capital instruments are met. Second, where the resolution authorities determine that an entity meets the condition for resolution, informing the decision about the implementation of resolution tool. And third, determining if shareholders and creditors of an institution would have received better treatment if the entity under resolution had entered into the normal insolvency procedure. These are so-called valuations 1, 2, and 3. Robust valuation contributes to the effectiveness of resolution actions, including the legitimacy and soundness of the decision, as well as the achievement of the resolution objective. In order to be robust, a valuation must rely on the timely provision of high-quality data and information to the valuer. To ensure data availability and quality, there is the need to enhance institutions' readiness in the course of the resolution planning phase. The Single Resolution Board has already made clear its expectations regarding the Management Information System, MIS, and the importance of providing quality data on a timely manner to enhance resolution preparedness in a document titled Expectations for the Banks, which you can find on the website of the Single Resolution Board. Expectations for banks. The SRB establishes that banks are expected to have adequate management information systems and supporting technological capabilities and infrastructure in place in order to provide the information necessary to perform a fair, prudent, and realistic valuation in resolution. As part of the resolvability assessment, the BRD requires that resolution authorities assess the institution's readiness for valuation and MIS capabilities. In line with the SRB's expectations for banks, institutions should establish adequate governance, quality assurance, and continuity arrangements to ensure that the MIS capability satisfies some key principles before and during the resolution events, including, as part of their resolution governance arrangements, banks are expected to establish, under the direct responsibility of the management body, effective governance to ensure that their MIS are able to provide the information necessary for resolution planning and execution on a timely basis. Second, banks are expected to demonstrate that they have the quality assurance arrangements in place and to ensure that their MIS capabilities achieve readiness for resolution. More specifically, banks are expected to demonstrate the periodic testing and upgrading of their MIS capabilities. Third, Banks are also expected to maintain up-to-date documentation describing how these capabilities can be relied upon. The documentation should describe the source system used for the production of data and how the systems operate, controls in place, stakeholders involved in the preparation and validation of the data. Today's session focuses on how the SRB is helping valuers and institutions to prepare for valuation and resolution. The SRB published last year the SRB Valuation Framework under the guardianship of Jose Carlos, who will lately follow the presentation. Another fundamental project concerning valuation preparedness and resolution embedded in resolution planning in SRB's proposed approach regarding improvement of management information systems and the standardization of data and information for valuation. SRB Valuation Framework in 2019, the Single Resolution Board published its framework for valuation. The objective of this framework is to provide independent valuers and the general public with an indication of the SRB's expectations regarding the principles and methodologies for valuation reports as set out in the legal framework. Valuation 2, either provisional or definite, as well as Valuation 3. The framework for valuation aims at reducing uncertainty for both the independent valuers and the SRB, providing indications that are necessary for achieving the goals of the valuation, subsequently enhancing comparability and consistency of valuations across future resolution cases. Regarding improvements of MIS, the SRB has developed the SRB Valuation Dataset, which will ensure consistent implementation of the European Banking Authority's data dictionary of the banking union. Finally, just to mention that the European Banking Authority, EBA, and the SRB have collaborated closely in their respective works on valuation, which is also living proof today, Anna and Carlos' presentation, including how to guarantee that provision of accurate and timely information necessary for the performance of valuation and resolution. For example, developing the EBA data dictionary and SRB dataset for valuation. I'm sure that Anna from ABA and Jose Carlos from the SRB will explain and elaborate on all this during today's session. I hope that today you'll enjoy the fruitful exchange of views and opinions regarding valuation and resolution, and that if you have any questions, most of them will be adequately answered, or at least we will try. Now I give the floor to Jose Carlos Molina Franquelo, and I wish you all a very nice and interesting presentation. Thank you.
Thank you, Boštjan, for this introduction, and I'm going to focus on the two main blocks of the presentation. As Boštjan described, one is about the framework for valuation, and the second block will be more focused on the work on improvement of the management information system for the institution. This is the two pieces of work that the SRB has been developing to enhance preparedness for valuation. And the framework for valuation is some work that we did actually in parallel with the work of the handbook for the EBA, and it's maybe important to explain from the beginning the differences of these two documents. The EBA handbook for valuation is addressed to all resolution authorities as a guidance recommendation that the national resolution authorities can follow, while the framework for valuation is about SRB's expectation and is addressed mainly to the independent valuers, but it's also helpful for the general public and for the institutions. It's where SRB establishes its expectations regarding the valuation reports, especially about valuation 2 and valuation 3. The starting point is always the legal framework. It cannot be different than that. But since the beginning, we saw the need to provide some additional guidance to the independent valuers when exercising or performing valuation exercise for the SRB. The fact is that independent valuers are used to do valuations in a private setting for private transactions, but not necessarily were familiar with the framework regarding resolution and the needs of the SRB. There were two options here: to define broad principles, or to be a little bit more consistent in terms of guidance to the independent valuer. So every time that we engage an independent valuer to perform some type of valuation exercise for the SRB, we will have to provide guidance to the valuer regarding expectations for the SRB. We thought it was better to have this all in one document to guarantee consistency and to provide to enhance the comparability and the consistency of valuation reports from this independent valuer. So now this framework for valuations is a public document that everybody can see. It's mainly based on describing what are the characteristics of the report of the valuation that the SRB expects to have, and including the expectations or explanation about the assumptions, the underlying assumptions of the valuers regarding the report of the valuation. We expect that they explain why they deviate from the assumptions from our expectations, and we accept those deviations from our expectations if they are well justified and explained. So that way, we are not trying to hinder any independence here from the experts, from the independent valuers. And we expect also that there's a relationship between the implementation of the resolution tools and the resolution objectives and the results of the valuation. We also think that this document is also helpful for the institution to increase preparedness for resolution, because they will understand better the procedures and the processes and all regarding the performance of the valuation by the independent valuer for the SRB. Finally, although this document is not necessarily focused on the improvement of the management information system, it already provides an indication about how important information is for the performance of the independent valuation. So focusing on the structure of this document, just to give you a broad idea of what is in there, and as Boštjan mentioned, is available for all you and our webpage. Chapter 2 elaborates on the different valuation methodologies, the more commonly accepted valuation methodologies. So there's some reference to discounted cash flow, to market multiple methods, and to the adjusted book value. Obviously, there's more elaboration on the discounted cash flow method, which is the most the method that is commonly accepted as the most complete and the one that incorporates most of the parameters that will determine the cash flows and the discount rates applicable in a normal valuation exercise. The reason why we included this chapter plus the Annex 1 of Chapter 6 in this framework for valuations to give the indication, the expectations from the SRB is that we expect valuers to perform this valuation exercise following the commonly accepted methodologies in practice in the field of valuation. We don't want to find that someone comes with some type of new methodology that we don't know, and this is not something that would be reasonable for us. The Chapter 3 focuses on more specific issues related to the implementation of the resolution tools and the relationship with the valuation approach. And it contains one section for each one of the resolution tools. So one section is about write-down and conversion of capital instruments and bail-in, breach institution, asset separation, and sale of business. In some circumstances, it's impossible to perform a final valuation tool before the resolution weekend, and the regulation provides the possibility to perform a provisional valuation. This is the focus of Chapter 4. Chapter 5 is about what is commonly known as Valuation 3. So it's about the counterfactual scenario when to check that the creditors and the shareholders of the institution will not be worse off in a resolution that it will be in normal procedures. As I mentioned before, this document has two annexes. One is just complementary of the chapter on valuation methodology, and the other one is about general consideration about the treatment of specific assets and liabilities. I have some questions that I wanted to share with you here in the poll. We say the framework for valuation focuses, and I see that most of you have answered 1, 2, and 3. No, sorry, 2 and 3, which is correct, and then some of you have answered 1, 2, and 3. I just want to explain why the framework for valuation in reality only focuses on valuation 2 and 3. Valuation 1, as explained by Boštjan in the introduction, is about checking that the conditions for resolution are met. And it's basically one valuation based on accounting basis valuation. So we didn't think that the SRB could provide any additional guidance there. The accounting rules, the accounting frameworks are commonly known as IFRS or national GAAP, so we don't think we can add any value. So the framework for valuation is focused only on valuation 2 and 3. So as I mentioned before, there's some chapter there about valuation methodology, because the valuers will have to make sometimes decision trade-offs about, for example, to perform a more granular valuation, what is called a bottom-up approach, or something more top-down, depending on the quality of the data or the time that they have available. Again, what we think is that the valuers can choose which way they would like to go, but we need to know at the SRB what are the assumptions that they are taking, and why, explain why they are going in one direction or the other. They have to explain about the current, focus also on current market conditions, or even about explain the macroeconomic scenario that they are going to include in there. The framework for valuation also mentions some key characteristics of the valuation 2 and 3. I'm not going to extend so much here because maybe Anna is going to focus more on this, but I just want to make you aware that this is something that is a summary that it contains in the valuation framework. Just to say that valuation 2 is basically to inform the decision of the resolution authority, and it should include also a counterfactual scenario about how the treatment of each of the shareholders and creditors will be under normal solvency conditions. But while valuation 3 will be an ex post valuation to determine that the shareholders and the creditor will not be treated worse in resolution than evaluation. And I think this table is a good summary of the different characteristics of the two types of valuation. As I mentioned before, we always follow the legal framework, and valuation 2 should follow the EBA standards, so Commission Delegated Regulation 2018/345, while valuation 3 should follow 2018/345. But I don't want to extend too much on this. I mentioned before that that valuation 2 is performed by the independent valuer to support the choice of the resolution action. And broadly speaking, you have a good summary in this slide about what will be the objectives of the valuation with respect to each of the different tools. For bail-in, it will be to assess the value of assets and liability to determine the amount of eligible liabilities that needs to be written down or converted, and in case of conversion into equity, to determine the post-conversion equity value and the conversion rates by the resolution authority. In case of the sale of business, we're talking about two options. If we sell the whole institution to determine the value of the institution as a whole, or if we're talking about selling some assets and liabilities, some business of the institution, the evaluation should inform the perimeter of the transaction, but also in both cases the commercial terms of the transaction. Basically, this is an indication for the board about what will be reasonable as a price to get for the sale of the institution or part of the institution. just to inform the decision. In a breach institution, it will be, again, to determine the perimeter of the assets and liability to be transferred to the breachman and any consideration to be paid, the value of any consideration to be paid in this case, and the same for the asset separation tool. The valuation tool also focus on the assumption that all losses will be recognized before the implementation of the power to write down or conversion by the resolution authority or the performance of any bailey. It might be not clear at the beginning which resolution tool has to be applied ex ante. So it might be that the valuer needs to perform different scenarios with the application of different tools, might be simultaneously or sequentially. And this has to be guided by the resolution authorities. So when we work together with the valuers, we tell them to perform different exercises, considering different options. The scenarios, according to the resolution plan, that might not be relevant will not be assessed by the independent valuer. In any case, in any of these tools, and you see in the column on the right, different, according to the regulation, different measurement bases will need to be implemented. We're talking about bail-in, usually it's whole value, although a combination of whole value and disposal will be implemented. Disposal value for some portfolios of the institution, for example, classified as available for sale. While in sale of business or breach institution or asset separation, we're talking about disposal value. Just to mention that, and I think this is a good summary in the regulation. Again, when we had some interactions with the valuers, this was something that they were not really familiar with. So we need to insist, and this document makes it clear that they have to follow this measurement basis with implementing the scenarios according to the different resolution rules. And this is something that they were not necessarily familiar with, and the definitions are obviously in the ADA standard. So just to give an example of how we define our expectations in the document, I just wanted to put one that I think is really relevant, and it's one where we are a little bit more prescriptive. It's about the range of the results of the valuation. We have limited the results of the valuation to the regulation says that we need the valuer needs to provide a best estimate, and we have restricted the range up and down within a band of between plus minus 5–10%. Again, we acknowledge that in some cases the level of uncertainty could be such that the valuers could need to go above these ranges, but they will need to provide an explanation why they deviate. The regulation also includes in Article 8 of the standard some reasons why, because of non-performing loans or assets that are not liquid, etc., there will be justifications to include higher levels of uncertainty in the valuation. And here I just included another example of what we mean about expectations. So, for example, for discounted cash flow, we estimate in general that 5 years time horizon should be enough or should be adequate. But of course, we would allow the valuer to deviate if they consider that this should be more efficient. And before I run out of time, I would like to focus on the second part of the presentation that, as I mentioned before, is the second piece of work that the SRB has been developing to prepare for valuation in resolution. And this one is more focused on the provision of the timely and reliable information for valuation. The issue here is that we thought that it was important to follow some approach that would guide the institution how to prepare for the provision of this data. Again, you have the possibility of have high-level principles like Boštjan described before for the improvement of management information system, but we thought it was also important to have some more granular guidance for the institutions about how to achieve this. So now we have an approach that sets high-level principles and operational guidance. This is based on the development of some data dictionary by the EBA that we have cooperated with them, and the implementation of this data dictionary for the banking union, which is the data standardization of the data sets, SRB data sets. So basically, these are common templates. The only thing is that for us, the data sets is an implementation of the EBA data sets for the banking union. What will be the differences? The differences basically is that the data dictionary for the EBA is in scope, is a recommendation to the national resolution authorities, and it covers banking union and non-banking union. While the SRB data sets, we have worked in parallel, and what we have managed is to, in order not to overburden the institution, to reduce the number of data fields that we will request to the institutions to provide, not including, for example, any other previous reporting that the institutions have already provided. And the most clear examples will be Anna Gardella reporting and any reporting, for example, of the derivatives to ESMA. This way, we will reduce the number of fields of the data sets, and we provide guidance to the institution. But I just want to make clear that this is not a new reporting. And this is something that the SRB is using as a tool to start a dialogue with the institution and discuss about improvement of their management information system. We consider that this is like the minimum set of information that the valuer should have to perform the evaluation exercise. And what we do is to provide this guidance to the institution. And we have also used the same definitions as provided in other regulation and accredited or FINRA court, etc. So we have tried to make it efficient so that the institutions really have to focus on the provision of the data. What is the approach of the SRB? What we're trying to do is to embed this approach into resolution planning process. We're already working in the IRT, so the internal resolution teams, the teams that work together to draft the resolution plans. We're working together with the institution, and we request from them to do first a self-assessment about their capacity to provide this information that we have defined in the SRB data sets. We ask them to perform a self-assessment and tell us if there's any gap in the information, how fast they will provide the information, and the quality checks of that information, the quality level. We anticipate, or we expect to have continuous dialogue with the institutions after they perform this assessment. And based on this assessment, we expect some of these institutions, or ones that we have prioritized for 2020, to provide a multi-year annual program to improve and address the shortcomings that they might have in the provision of the information for valuation. And this is what I wanted to tell you. We have already also a couple of questions there. So the SRB data set establishes a new reporting requirement. I see that 100% got it right, exactly. I just mentioned that we are not setting new reporting, although in the future, we might have some type of dry runs with the institution to check that they are able to provide this information. But this will be part of the future implementation of the multi-annual program that we request from the institutions. All right. And I say the SRB data says a tool. It provides guidance to banks about SRB's expectations regarding their MIS, and it's true. It's exactly that. This is what we're trying to do, to provide additional guidance, because we thought that if we only stay in the high-level principles, the first question we will get from the institution is, what exactly do you need for valuation? And as I mentioned before, we think it's a minimum set of information that will be needed. It doesn't mean that we don't think that we will need additional information. We think that at least this is the starting point, And in some other cases, we will need maybe additional information to be put in a VDR, like financial statements, audited financial statements, but this will not improve the management information system of the institutions. And I leave it like this, so I think I spent my 20 minutes a little bit more. If there's any other question, I hope I can answer them. Thank you.
Thanks a lot, Jose Carlos and Boštjan. So let's hand over to Anna. I see that the slides have been loaded. Anna, the floor is yours.
Hi, good morning, everybody, and thank you to the EUI and Florence School of Banking, to Jose Carlos and to Boštjan for their presentation. What I will try to do is to try to go through my slides and complete Jose Carlos' presentations in areas for aspects he hasn't had the time to touch upon exhaustively, let's say, and so I will start from DBA Valuation Handbook. So we, as EBA, developed a valuation handbook together with the work that has taken some time and that we have developed with the national resolution authorities of both the banking union and the non-banking union. It is drafted in accordance with the EU legal framework and regulatory framework. I'm not going to go into the legal sources because they have already been explained by Jose Carlos. Our valuation handbook is addressed to the resolution authorities. And the purpose for developing this valuation handbook has been to support the resolution authorities in implementing the valuation process, which is quite complex and for which further guidance was needed. It is not binding, but we expect that it will provide a convergence of practices throughout the European Union, not only the banking union, but also with the non-banking union resolution authorities. By making it public, even though it's not addressed to valuers, we intend to bridge the gap between the regulatory view and the valuation view, for which valuers are the most expert. We have published the valuation handbook in February 2019, and as you will see, we have recently completed it with the publication on Monday this week of the chapter on the management information system. So in terms of content, it covers valuation 1, valuation 2, valuation 3, some aspects about the appointment of the valuer and the relationship between the resolution authority and the valuer. The focus, however, just as much as the SRB valuation framework, is placed on valuation 2. And I would say now, with the publication of the chapter on management information system, also on this aspect about institutions' preparedness. I'm not going to spend so much time on this slide because I think it has already been outlined by Jose Carlos. So the main legal and regulatory features of valuation in the context of the resolution. Maybe I can spend a few words on the main overarching principle of valuation. So valuation for resolution is an economic valuation, so it's not just an accounting valuation. So it's a valuation, sort of valuation, the same kind of valuation that needs to be done in case of implementation of transactions. However, it has to be done in accordance with the regulatory provisions that have been enacted in the two regulations relating to valuation before resolution and valuation after resolution. It's based on two measurement bases: the whole value that has to be applied in case of application of bail-in, and the disposal value that is applied whenever assets and liabilities are transferred out of the banking resolution to another entity. Maybe what I can guide you through is this stylized process of valuation that we have developed in our valuation handbook to provide some guidance, and the various steps of evaluation too. So moving from left to right, we start with the updated balance sheet of the institution. Then the second step is the groupment of the various asset classes in clusters, like loan book 1, loan book 2, other asset classes. At this point, you see that the mere accounting information needs to be enhanced and completed with additional data information. And this is where the data information of the management information system that are provided by the institution come into play. So this is where basically the valuation tool really starts. The various asset classes are valued in accordance with the MIS information system information and the valuation approaches. And a resolution balance sheet is formed reflecting the economic values of the economic valuation tool. Based on this resolution balance sheet, the resolution tools are applied. And for instance, the haircut are imposed, and all the steps that need to be done for the application of the tool from a valuation perspective. A further step, which however is outside resolution, is reconciliation of the economic values with the accounting values. And this is a further step that needs to be done, but with the formation of a new pro forma accounting balance sheet, which however is, again, as I said, is a step other than the valuation. Going through the content of the valuation handbook of DBA, we just a glance at a chapter that we have dedicated to the valuation report that the valuer has to draft. What we have set out in this chapter are the expectations of resolution authorities for each kind of valuation. Why? So we have set out the minimum information and the specification of the evaluation from the perspective of the taking of the resolution decision. So what kind of results and information of the valuation the valuation should contain in order to allow the resolution authority to take an informed resolution decision. This is about the evaluation 3, but I think Jose has already explained it, so I can move on to the new chapter of the valuation handbook of the BA that we have published on Monday, and you can retrieve it at on internet at the link that is reported on the slide. So this chapter deals with enhancement of preparation of the management information system for valuation in business as usual, and deals with the assessment that resolution authorities should conduct in the resolvability assessment phase about the completeness, the quality of the data and information that institutions should be able to provide to the resolution authority or the valuer in a timely manner in case of resolution to support a robust valuation. We have elaborated this chapter together again with the national resolution authorities and in particular also with the SRB, particular as regards the development of the data dictionary. The main components of of this chapter in terms of policy approach, we have placed a lot of emphasis on the need to respect proportionality, and we have therefore translated this principle in placing importance to the institution internal capabilities, in avoiding duplication of data, and therefore leveraging on data aggregation capabilities, internal valuation models that are suitable for resolution, and all complemented by the data dictionary. Our approach is summarized in this slide, where you see that the purpose of the management information system is to support the resolution decision. And the approach is again to leverage on internal valuation capabilities. So internal valuation models suitable for resolution valuation, internal aggregation capabilities, and VU data dictionary. As a requirement, therefore, the data dictionary should be used by institutions to run a self-assessment of data and information that are already available within the institution. And this self-assessment should cover all, let's say, should cover the various models that the institution has in place, which, however, should be then assessed to be suitable for the valuation. Based on the outcome of this assessment, the institution should then set up a dialogue with the resolution authority in order to properly calibrate the content of the management information system. Again, in terms of the content of the data dictionary, we have translated the principle of proportionality and avoidance of duplication of data by placing a lot of emphasis in including in the data dictionary those data that are already required from institution to produce based on EU legislation, such as ANACredit, the ESMA's ABS templates, the EBA MPL templates. We have, as I mentioned, closely cooperated with the SRB, therefore taken data provided, included in the SRB templates, and completed also with, for those areas that were not covered by existing data sets, we have added relevant data, and then we have consolidated all this data and information in a data dictionary that is organized in the EBA data dictionary. This data dictionary covers has a broad reach, but again the calibration should follow the self-assessment by the institution, and therefore should reflect the institution's balance sheet and materiality of the various areas of the balance sheet that, however, are relevant for valuation. I would stop here and see if you have any question.
Thanks a lot. Thanks a lot, Anna. So I think it was a very comprehensive presentation on both sides. I'm sure that it will have sparked some clarification questions because because of the mere amount of information and data that you brought in, and I think it was really systematically performed. So what I would do is that I would invite every participant who wants to come up with a question to start thinking about it. And I can see that Dalvinder, hi Dal, has already a question. And in the meantime, I could see also that Diana has posted the results of the various polls that you ran. So if you can also have a look while we discuss at this, we will go back to the poll results in the second step. We don't have so much time, but let's get a few questions together and then go back to the poll results and see. I'd be curious to see whether you were surprised by one or the other responses, and if you could guide us through that, this would be fantastic. So for now, a question by Dalvinder Singh: is there an implicit or explicit time framework for the hold and disposal periods? To whom should I lead the question to? Jose Carlos?
Anna can correct me, but I don't think there's a time framework for this. I mean, there's not even in reality any time framework for the evaluation exercise. That's why we have in case of discounted cash flow in the framework established a period of 5 years that we think is reasonable in most of the cases. But as we mentioned before, it's also subject to the judgment of the expert judgment of the independent valuers to define it. In some cases, if they want to change that time framework. For bridge fund institutions, it's also in the regulation restricted to the 2-year period of normal life of a bridge fund. That should also be taken into consideration. But apart from that, I don't remember any specific guidance in the regulation that establishes any time framework for evaluation exercise in general.
Very good. So we're still on the time. Patrick Claffey is asking: is there a timeline when the SRB will provide the SRB valuation data set to banking union banks, or when it will be made public?
We are considering to issue a consultation of the approach. We were also waiting for our colleagues from the EBA, like they did this week, to publish their own data dictionaries, because it makes sense that once it's clear about the approach of the handbook and the EBA approach, we most probably, but it's subject to internal approval by the SRB, in the following month we'll probably publish a consultation.
Okay. Anna, would you like to step in on those two questions to complement, or shall we just come up with?
Well, maybe just on the first one. Yeah, of course, I agree with Jose Carlos. There is no predetermined timeline for hold and disposal value. Maybe for the disposal value, we can further clarify that, however, it needs to take into account the current market conditions and, for instance, potentially liquidity and potential need for a fire sale. So even though there is no predetermined time horizon, there are current circumstances that need to be taken into account.
Okay, very good. So let's then go back to the poll questions, and I'd be curious again to see whether Boštjan, Jose Carlos, or Anna, you were surprised or intrigued by some results. So the first question was about the framework for valuation, which focuses on, as you explained very well, 1, 2, 3. And then the other option was valuation 3 and valuation 2, 3. So what was the correct answer there?
Correct is 2 and 3. Most of the people got it right. I explained why we focus in our document about valuation 1. And even that we basically the document focused much more on valuation 2 and 3. We provide some some guidance about valuation 3, but basically the idea is the valuation 3 is also subject to national specificities because of the insolvency regime of the different jurisdictions. And we do introduce some guidance there for valuation 3, but not about valuation 1, that is mainly accounting-wise, accounting-driven valuation, where we don't think we can add much value.
Okay, very good. So then the question 2 on the adjusted book value. Would you like to engage with this one?
Yes, the thing here was that we mentioned in the presentation that there's some, and it's in the regulation, and I remember Anna insisting on this, that the prefer or there's certain hierarchy in the regulation that discounted cash flow should be the preferred methodology to be used, and the other ones are mainly a proxy of a discounted cash flow that can be used because of circumstances of timing or not enough information or quality of the information can be also used. So the adjusted book value is perfectly acceptable in certain circumstances.
On this valuations one, that if 1 to 3, well, I guess for some it's easier to see the differences in valuation 1 is pretty much going concern. 2 is non-concern. 3 is liquidation values. Valuations that are used for different purposes. Valuation 1 we pretty much used for triggering fail. Valuation 2 for appropriate resolution tool, and then valuation 3 pretty much for assessing no credit resolve. It relates to the insolvency in this respect. Valuation 3 is of course P1 that causes a bit of uncomfort. Why? Because we still deal with 19 different resolution insolvency regimes in the banking union, meaning that valuation 3 in different countries might refer to different.
Okay, great. So unless Anna, you wanted to step in, I think I would just go back to question 3, which was corrected now. And the question 3 was the SRB dataset establishes a new reporting requirement. Initially, the institution shall report each quarter, and then 5% said true and 95% said false. Was this a correct answer of the majority?
Obviously, it's not a new report. ABA proposed approach in the MIS chapter of the handbook. We don't see this as a new reporting requirement that will be imposed on institutions every 3 months or 4 months or anything like that. It is about providing the institutions with the right guidance about what information we think, what data field we will expect to have available in case of resolution. And this way, the institutions can be more precise in improving their management information system and checking their databases and their systems to see if they have that information already available in this self-assessment that we would request from them. And if they detect that they don't have the right systems, they could work on those shortcomings for the next resolution planning cycles. And that way we embed this approach in resolution planning.
Very good, thanks a lot. So we will finish with the last question, the last poll discussion, and then to close up, there is a question explicitly directed at Anna, so we will engage with this and then finish the online seminar. So question 4 was, the SRB dataset is a tool. It provides guidance to banks about SRB's expectation regarding their MIS. Is it true or false? And the majority said true. So I take it, but feel free to compliment that they understood what you meant and what the exercise is about.
I think it's exactly what I explained before. No, it's a tool, or it's a guidance for the institutions to work on their capabilities, and this way we embed this process into resolution planning, and ideally in the future when we test it, and hopefully not because we need to test really in a crisis situation, that we can perform some dry runs and check with the institutions that they are able to provide this information on a timely manner.
Okay, fantastic. So a question from Manuel Merck, who is asking, who's saying we're already informed about the SRB steps to launch the dialogue on valuation for banking union NRAs and banks. Any envisaged work program from the EBA to exchange, provide guidance, create awareness to non-banking union NRAs on valuation? Is there anything you can tell us on this, Anna? Anna, your mic is still off. So yeah, now it's fine. We should be able to hear you.
Okay. So thank you for the question. That allows me to explain how we work at BBA and how this product, the evaluation handbook, including the last chapter on management information system, is really the product of the cooperation of the national resolution authorities, or both the banking union and the non-banking union, and also of the SRB. So because as EBA, our outreach expands to all the member states of the EU, not just the banking union. And the way we work is to set up working groups where experts from all resolution authorities may participate. In this case, the working group was pretty large in terms of composition. I think maybe 24 authorities participated. So it really reflects the common view of the national resolution authorities, or resolution authorities in Europe. Or this is of course our wish. And I think has really created a common language throughout the EU about how to deal with valuation issues. And so this is in terms of the exchange with banking union, non-banking union authorities. In terms of exchanges with banks and valuers, we have also cared about that. And in connection, before the publication of the two parts of the handbook, so the general handbook that we published last year and the specific chapter that we have just published this week, we have held workshops with valuers and with regards to the management information system, also with banks. So we have had this kind of interaction in order to assess, first of all, whether we were going in the right direction in terms of valuation expertise. Therefore, the interaction with valuers has been extremely useful. And with banks also the same thing. We wanted to test whether our requirements were well calibrated in respect of the bank abilities and impact to enhance their valuation preparedness. And actually we have taken the opportunity of the handbook also to kind of disseminate the importance of resolution and valuation, and the knowledge about the two streams of expertise, and try to bridge the gap between them.
Okay. Thank you so much. So since time is flying, I would suggest that we conclude, but I would just like to give the last opportunity to Jose Carlos and to Boštjan to come in and say some concluding words if you'd like to.
Just say,
well, on my side, I would like to thank you.
Please, yes. Anna, go on.
Okay, sorry, now thank you very much for this opportunity. And again, I think that had we and the SRB not undertaken this work of, first of all, for our own expertise, but also of publication, we would not have had this seminar, which we think it's very, very useful really to grow the expertise in this very important field for resolution.
Okay, thank you. Jose Carlos, Boštjan?
Well, I hope it was useful, and I hope that at some point we will, as I mentioned before, we make our approach improvement of management information system public, and I think that it's a subject that some people that don't realize that it's more specific than purely only valuation in normal valuation exercise. There's some specificities of valuation and resolution that are restricted or conditioned by the legal framework, and that resolution authority is in charge of somehow coordinating the process, but the independent valuers are the ones that have to perform the valuation exercise, and we have to facilitate that exercise to the valuers and to the institutions. And this is what we're trying to do at the SRB, to embed this preparedness for resolution inside resolution planning, making the life of independent valuers easier, and probably making the life of the banks and the institutions not too complicated to achieve those results. And I give the floor to Boštjan to conclude.
And what is at least for me, very important, that this is something that I'll just pick it up on Anna and Jose Carlos said. The point where usually resolution breaks down in terms of legal perspective is valuation. This is the most litigious part of any resolution, because at point of time you are using all the available resources, but of course, if based on valuations, certain actions are needed, not everybody might fully understand and accept. That's also the reason why every single resolution so far ended up in court and being in a very tedious and long process. The reason the focus on extremely important, so should be fully aligned. First, regulators and authorities, and then second, should provide the guidelines, values to that. I would thank you.
Thanks a lot, Boštjan. Thank you to all our participants. It was great to have you with us. It was great to have you also asking questions, and I hope that this added value. I know that you're going to now go back to whatever you were doing before, but just a last word to say that on the 31st of March, we're going to have our next online seminar on a different topic. It's going to look at bank and fintech collaboration opportunities. And we hope that some of you will be able to come back in that occasion. For the rest, thanks again to everyone, to all our speakers and participants, and have a good afternoon.